The Seed Enterprise Investment Scheme, SEIS for short, is a government scheme that allows experienced investors to invest in small, young companies and receive generous tax relief. The companies in question are very early stage. They must be less than 2 years from the start of trading and can have no more than £200,000 in gross assets. You can invest in a single company or in an SEIS fund, which is a portfolio selected and managed by a venture capital firm. Technology is one of the more common areas for SEIS, as these companies often aren't capital intensive. But it's not only technology. You also get businesses in other areas, for example, life sciences or media production companies. An example is Cognism, a company that provides an intelligent database of sales leads for businesses.
Take the lead with Cognism for Salesforce. When it comes to prospecting, we've got it covered.
The platform has information on millions of business contacts worldwide. It uses artificial intelligence to make contextual suggestions to salespeople, for example, how to personalize the message or optimal times to get in touch. Cognism was backed right at the beginning in 2017 by SFC Capital through the Startup Funding Club SEIS Fund. At the time, Cognism was pre-revenue. Within 3 years, it announced it reached over $10 million in annual recurring revenue. In March 2020, early SEIS investors had an opportunity to exit. So what are the tax reliefs and how do they work? The first is income tax relief. When you invest in an SEIS qualifying company, you get income tax relief of up to 50%, provided you hold the shares for at least 3 years. Invest £10,000, for example, and you could receive up to £5,000 back, assuming you've paid or are due to pay sufficient tax in the first place in that tax year. Second, any profit made when you exit your SEIS investment is free from capital gains tax. Third, by investing in shares in an SEIS qualifying company, you can also wipe out half of any existing capital gains tax liability. So if you were to have a capital gain of £100,000 and a capital gains tax bill of £20,000 this year, if you invest £100,000 in an SEIS qualifying company, you could wipe out £10,000 of that CGT bill. In this example, a £100,000 investment in an SEIS qualifying company could save you £60,000 in tax when adding the income tax relief to the tax saved by halving the capital gain. The maximum you can invest in an SEIS in one tax year is £100,000. So what happens if I lose money? Because the government wants people to invest in young, smaller businesses, it offers very generous tax relief, which can help cushion any losses and amplify returns. With SEIS, you get tax relief not only on the way in, but also if you lose money. You can write off any losses against an income tax bill. This means if everything went wrong for an SEIS investor who'd claimed all the tax reliefs and they lost their whole investment, the actual loss to a 45% taxpayer could effectively be as little as 13.5 pence in every £1 invested. The final tax relief on offer gives freedom from inheritance tax as long as the SEIS is held for at least 2 years and at the point of death, potentially saving a 40% inheritance tax bill. However, SEIS investments are by their nature very risky. You are, after all, investing in very small startup companies, and you should expect some to fail. That's why SEIS is high risk and only for experienced investors. You could lose your capital, and you should not invest money you cannot afford to lose. A professional manager can help navigate that risk, and if you invest in a portfolio rather than a single company, you can get some diversification. You should still be prepared for the whole portfolio to fail, however. The investments will be illiquid. You can't usually sell them in the way you would sell a quoted share. Typically, you'll be waiting for the fund manager or the entrepreneur to arrange an exit, such as a trade sale or an IPO. To keep the tax benefits, you need to hold your SEIS shares for at least 3 years. If you are unsure, you should seek specific advice about the tax benefits. And remember, tax rules can change and the value of tax benefits depends on circumstances. For more information about SEIS investments, please take a look at the Wealth Club website.